We deal almost exclusively with location-independent entrepreneurs who either live outside of their home country or have business outside of their home country. The biggest mistake I see with Americans that have U.S. LLCs is they very often register it themselves. The problem when you do it yourself is you put your name on the entity in public record. If you're not a U.S. person, the U.S. is hands down the best place for you to register your company in like 95% of the cases. Most of my clients come to me after an oh shit moment. He ended up owing over €1 million in tax when he went back because he didn't do things in the right way. This is not a place to be cheap. Pay money to somebody who has 5,000 clients that has done this.
All right, so I'm here with Bobby Casey, the founder of Business Anywhere. Now, Bobby, I'd love if you could briefly introduce yourself. I know a lot of people already know you. You probably have more of a presence online than I do by far, but definitely just in case anyone doesn't know you, give a brief introduction of yourself.
First of all, thanks for having me, Scott. I always appreciate the time to get on and chat about this stuff. I think it's important, especially for the digital nomad community, to get more information and better information on how to deal with these situations they're dealing with, because it's becoming less unique. Let's say there's more and more people doing it, but that also means there's a lot of really bad information out there. So I like to get on here and kind of spread the gospel, so to speak, on, some good information. So, what I do, Business Anywhere, we are an online platform for startups, business owners who need a simplified place to register their company, registered agent service, virtual mailbox addresses, opening bank accounts, bookkeeping, tax filings, basically everything you need for compliance on your new business. We do tax consulting, that sort of thing. We deal, from the tax consulting side, we deal almost exclusively with location-independent entrepreneurs who either live outside of their home country or have business outside of their home country. So we're very much targeted on the digital nomad audience. At least one of our big demographics is the digital nomad audience.
Yeah, and that's definitely pretty prominent here in Thailand, specifically, Bangkok, Chiang Mai, even in the the islands and down south, you'll get a lot of digital nomads. So
we got tons of clients in Thailand for sure. All over Southeast Asia, but yeah, we have tons of clients specifically in Thailand because it's a digital nomad hotspot, right? I mean, it's just a big hotspot, and rightly so. It's a great place to live. It's a great place to spend time. Great weather, great food. I mean, it's a nice place.
Yeah, and I know you've been here, and I know you're not here right now. This is one of the unique cases where I thought it was worth bringing you on the spot, despite not being here in Thailand yourself. But again, you're familiar with the area. You have a lot of clients in this area. And, honestly, the main reason I invited you on, Bobby, was because the last couple of years, like I've been in Thailand since 2012. A lot of people have heard me say that a million times, but I've been here for a long time, and I've seen a lot of changes happen. I've seen governments change. I've seen it go from essentially being very oriented towards bringing in more digital nomads, bringing in more business owners and whatnot, to then cracking down and going, just it sways back and forth, right? And right now, in the last couple of years, I've really seen a lot of people freak out more than they have in the past, because there's a lot more crackdowns about tax residency, and to say, okay, how much money you're going to bring in this year, how much money, if you sold a house in the US and then you brought all your money at once, then how much of that is actually taxable in Thailand? There's just all these different scenarios, and you have to be careful. And so that's obviously why I thought bringing someone on with expertise in this area would hopefully save some people some money, because we can talk through some scenarios like this. So that's kind of the goal today. But one thing I wanted to know from you, Bobby, is this unique to Thailand? Because I've been here, I've been focusing solely on Thailand, and I've seen that shift, but I'm just curious, are clients of yours in other areas also getting a lot more regulations, a lot more crackdowns? Is that happening around the world or no?
Thailand's a great example of that. I mean, they're changing their rules. Jesus, they are even at the point where they don't even know which rules are which now, right? They have conflicts in their laws that they'll talk about one thing and then they pass a law that conflicts with something else, and it's a messy situation. So you got to pay attention. And if you are nomadic, I mean, maybe you need to move to another place if you want, if that's conducive to your lifestyle. Maybe you need to be flexible. And I'm not trying to throw Thailand under the bus here. It's just using it as an example. But if you like Southeast Asia, Thailand makes it hard. Philippines says, hey, come on over here. Maybe go there.
Yeah, definitely see what makes sense for you as an individual. I'd agree with that. One thing I would say though is I do think sometimes people put up their hands a little too quickly, right? Because you're right that it's complex and things change, but it's kind of like I don't know. I personally don't go to a lot of the expat forums, but you'll see expat forums or Reddit or whatever, and everyone's every year is saying, "Oh my gosh, it's crazy! No tourists are ever going to come back to Thailand again. No one's ever going to live there." And it's like things, the pendulum swings, and it's kind of okay. I honestly think that's something I really learned about Thailand is you got to not freak out about things, right? Yeah, I mean, you got to be mindful.
Yeah,
You got to be
chill,
careful.
man,
To your
chill.
point, yeah, you got to be careful, right? I mean, it's not to say, oh, don't worry about it. Everything will blow over. Nothing. I mean, they'll never crack down on something for taxes. They will. Be careful. Make sure you're doing the right thing, but don't freak out every time a new announcement comes out because it's going to be okay. And honestly, to your point too, when you said conflicting laws, I mean, it's usually conflicting departments, right? So you'll have
Yes,
one
yeah.
government department that's basically saying we want more tourists, and another one saying there's no way we can actually monitor that, or they're saying we'll bring people on DTV and we'll make sure that they qualify in these ways for their bank accounts, and then the department that then has to actually look through the bank account says, well, we can't read all these different languages to assess whether or not these are real or photoshopped, right? I mean, there's just all these things where it's conflicting interests.
There's a huge I see this in almost every country. There's a big conflict between migration department and the tax office in every country, right? Yeah. Because people ask me this all the time, like about residency. Residency is a hot topic, right? In the digital nomad world. I guess probably tax and residency are the two hottest topics in the digital nomad world, hands down, by far. Residency and tax is almost always in conflict because residency is handled by the migration office. Tax is handled by the tax department, right? And so you have a conflict here. There's such thing, and a lot of people don't really understand this, but there is a physical residency and then there is tax residency, and they are not the same thing. Like people are like, yeah, but I have residency in Mexico, or I have residency in Argentina, or I've got residency in Nicaragua. I must have to pay tax here. Well, maybe, or maybe not, because residency, physical residency, is handled by the migration office. So that's a big mistake I think a lot of people make, making assumptions on the concept of residency, because residency just means you have checked the boxes on meeting requirements to fulfill necessary things for whatever, like your visa or your temporary or permanent residency requirements. So you've done X and Y and Z. The migration office says, yes, you can live here. Here's your visa, or here's your residence permit, or whatever it is. But that doesn't necessarily make you a tax resident. In most countries, you can be a physical resident without being a tax resident. In a lot of countries, you can be a tax resident without being a physical resident.
One thing I'll share is that, I recently became a Thailand permanent resident, and that was quite a difficult process. But I actually think it was, once you knew what you were doing, it was actually quite straightforward in a way. Like, as in, it was easy to understand what was happening, but it was difficult to actually do. The reason I say it's important to be, and I agree with you 100%, to be purposeful, right, is to say, what do you actually want out of this? What are you trying to do? Are you trying to work from anywhere, or are you planting a flag somewhere, right? But what you can't do is just go with the flow, because I made a number of mistakes. I could have got permanent residence years prior, but I had read some thing that was just inaccurate about how to do it, and I had written it off, right? For my situation, what I'm aware about this is that it's important that you are working for a number of consecutive years and you are paying taxes without breaks, and you have and hold the same visa for a long, period of time. And then at that stage, you can actually apply. And people will think, oh, only 100 people can apply a year. No, that's wrong. Only 100 people per nationality can apply per year in Thailand for permanent residence. That's true. But then what's important to note is that if you're an American or a Canadian or whatever, no one's getting anywhere close to that. So a quota is never an issue. So you absolutely can, but the most important thing is that you don't write it off and think that something's impossible because you just actually didn't do the proper research, right? So know what you want to do, right?
You got a good point there on bad information. So one of the other biggest mistakes I see people make going on a Facebook group or a forum or just asking a buddy, saying, what should I do? And they throw out a scenario like, I'm a German with an e-commerce business and I like to live in Southeast Asia. What should I do? What should I do? And then somebody tells them through a Facebook group or a forum or whatever, and somebody says, oh, you know what you need to do? Man, you just leave Germany and go register a Dubai company and you'll be good. And the biggest mistake you make, so by the way, I don't see any problem with people going onto these Facebook groups or forums to get information. That's not a problem. I think that's a good idea. Go watch the YouTube videos and stuff. Get the ideas, jot them down. But what you really need to do before you pull any trigger on a structure setup, residency structure setup, because to be honest, this stuff is super, super important. Like the structure of your business is critically important. I mean, this is your income stream. This is not the place to take advice from a Facebook group. Hire a professional to do this. This is not a place to be cheap. Be cheap other places. These things, talk to a professional. This is not a place to be cheap. Pay freaking money to somebody who has 5,000 clients that has done this. This is not a place to watch XYZ YouTube video and make permanent decisions about important things in your life.
Yeah, I would argue you get multiple opinions too, though, right? Because sometimes you can go.
I don't disagree with that. I had a client call yesterday with a guy, one of my consulting clients. What he does, and I have no problem with this. Like this is not a problem for me whatsoever. He has another guy a little bit similar to me, and he goes and bounces. We discuss. He goes and bounces the idea of the other guy, and then he comes back and does a consultation with me. Has he paid a bunch of money in consulting? Yeah, absolutely. He's paying double because he's paying both of us. This is an important thing for the structure of his life. He is an American guy. He's currently living in Spain. He has permanent residency in Mexico, and he travels around as a digital nomad. Well, this guy has a minimum of 3 flags right now. American, spending time in Spain, permanent residency in Mexico, right? He has a minimum 3 flags. Whenever you have multiple flags planted, there's so many things that can go wrong. If you don't do things correctly, if you don't have the business structure correct, if you don't have the right type of residency or visa. In his case, we talked about what he needs to do in Spain to be in Europe and the different types of visa options for him so that he stays compliant. So he doesn't like by default get trapped in some country's tax trap without knowing about it, you know, and then have like a big surprise, you know, when he goes to immigration and they say, looks like you've been here so many days and you had to pay tax or something like that. And so he wants to do the right thing and he makes good money. Like he makes good money. So he has a choice. He can read Facebook groups and just, let's register the Dubai company. Or he can find a professional that's going to make sure he's going to maintain compliance so he doesn't get in trouble. Because I'll also make this statement too. And a lot of people don't like this statement, but whenever you are living this lifestyle, kind of this digital nomad kind of lifestyle, have these multiple flags planted or whatever, you're going to have to get comfortable living a little bit in the gray area on certain things. I say it like this, like on a gray scale, like let's say 1 being completely clean, 10 being completely black. 1 being is, you know, I keep joking about it, but you're living in the suburbs, white picket fence lifestyle, local business, local job, paying your taxes like normal. That's kind of 1. That's the complete clean setup. And you can do that if you live in one place. That's easy to do if you live in one place. That's what you should do if you live in one place. On the 10 scale, I mean, that's like full black. Your clients all pay you with cash or Bitcoin. You don't report anything. You're non-compliant in every way, shape, or form. Okay. So the idea is kind of in this nomadic lifestyle, and I'm talking about nomads, ones that are moving, you know, maybe they live in 2 or 3 different places, or maybe they're just like the true nomad that, you know, lives a few weeks here, a few weeks here, a few weeks here. But if you're some version of nomadic, you're going to be somewhere on the grayscale. The idea is to get it like, let's say, a 3 to a 5 on the grayscale. I mean, obviously, that's a subjective number. But the idea is to be as clean as possible. But anytime you have multiple flags planted, you're probably going to end up with, there's going to be some conflict of laws between countries, and you have to choose the least bad option in your situation, if that makes sense. Like, I'll give you an example here. Well, I'm going to pick on Portugal again. So Portugal has a tax regime called NHR, stand for non-habitual residency. And so if you qualify for NHR if you have some type of residence permit or visa in Portugal and you qualify for NHR, the great thing with NHR is you can receive dividends from a company registered in a jurisdiction that has a tax treaty with Portugal, and those dividends are tax-free under NHR. So if you live in Portugal and you have a company registered in another country that has the tax treaty with Portugal, your dividends come to you tax-free, okay? So a lot of people in Portugal, they register LLCs in the US because LLCs in the US are very tax-friendly for almost everybody in the world because it's a pass-through entity. From the US perspective, it's a pass-through. A single-member LLC is what you call a disregarded entity for tax purposes, meaning the LLC does not pay tax. The individual who receives the income may or may not have a tax obligation based on the nature of that income. Well, Portugal does not have an equivalent entity to the US. They don't have an LLC. They don't have a disregarded entity. They have corporations. So if you are in Portugal under NHR and you get your income from a US LLC, you can maybe not pay tax. And I say maybe because there's a lot of variables on how it works in the US, but maybe you don't pay tax in the US. But from the Portuguese side, you can treat it like a dividend from a U.S. company because there is a tax treaty between the U.S. and Portugal. So that's a gray area thing, what I'm talking about. It's gray area because there's a conflict of laws between the U.S. and Portugal because Portugal doesn't have a disregarded entity like the U.S. does. So it's a difference in regulations between the two countries. But you're kind of arbitraging and taking advantage of two different countries for a tax optimization strategy. Okay. But it is a little bit gray area because in the US, you don't pay dividends from an LLC. But in Portugal, you can take a dividend from the US LLC. That makes sense?
It does. It does. It actually brings up another topic that I've heard a lot of from individuals here in Thailand, which is a lot of people tend to start their companies in Singapore or Hong Kong. I mean, for years and years, that was always the thing to do. And I think
it was the go-to for a long time. Yeah.
Right. And something that you just mentioned there, when you just mentioned the benefits of U.S., a disregarded entity in the U.S., whether it be Wyoming or Delaware, I'm not sure if you have any preferences, but the main point is that sometimes it can make sense to have that in the U.S. and sometimes it's actually a pretty good option, right? So I think sometimes the sexy thing online might be, oh yeah, Singapore or Hong Kong, which one is better? Where it's like, well, you might, let's say you're, especially maybe if you're an American citizen, did you consider starting a company in the US, right? Or if you're not a US citizen, there's even ways to do that, right? So I'm curious if you agree with that or not, where maybe people are not looking enough at the US as potentially being a good option to have a company and not necessarily always going to Singapore and Hong Kong.
Yeah, I can comment on all of that. So first of all, Singapore and Hong Kong are generally not good for most digital nomads anymore. And I'll tell you why. There's a couple of reasons. And I'm grouping them together because they're very, very similar now in the way they deal with things. So first of all, to open a bank account for a Singapore or a Hong Kong company, you need to be a resident of Singapore or Hong Kong. Like you need to actually be a resident there. So unless you actually live there, what you'll end up having to do is hire someone to be a director of your company who has legal authority in your company, who has legal authority over your bank account. So if you want to go open a company in Singapore, but you don't live there, so that raises your costs. You got to hire somebody who lives in Singapore. Now, there are services that offer that. Like, I'm not saying it's not an impossible thing. Like, you're not walking down the street in Singapore randomly going, hey, you want to be a director of my company? Like, there are services that do that for you, but it raises the cost because you have to pay them a director fee. You have to pay them fees to deal with your bank account. And you are exposing your bank to another human being that in reality doesn't have any real activity within your business. So that's one downside to it. Used to, you could, like, let's say 10 years ago, you could open a Hong Kong company and open a bank account at HSBC and not live there. It was no big deal, but that's not really possible anymore. The other downside is for both of those jurisdictions, the banks themselves don't like if you're not doing business predominantly in Asia. So like for years a go-to thing for people who were doing like e-commerce, like Amazon stores in the US. And so they would open a Hong Kong company with a bank account at like HSBC or something like that. And they were linking their Hong Kong company and HSBC account to their Amazon seller account, and they would receive all their funds. So they were, first of all, that was a big gray area thing anyway, because technically if you're selling products in the US, you have a US tax obligation, regardless of where your company is registered. So technically, if you were doing that in the past, your Hong Kong company should have been filing a tax return in the US, but nobody did that. So they were doing that because at the time you could do that. It was possible because it was a loophole people were taking advantage of. It was a very, let's go back to the grayscale. Let's say that was on the upper shadier range of the grayscale, but you could do that and get away with it. But what has happened since is those banks are now saying, if you're not doing business predominantly in Asia, we're just going to close your accounts. So I had a client, this has been a few years now, probably 3 or 4 years ago, but he was doing exactly this. He was doing e-commerce. He had a Hong Kong company. He had a bank account. They sent him a letter saying, we're closing your bank account because all of your business is coming from U.S. banks. Like all of his money was incoming from U.S. banks. Most all of his money outgoing was going back to the U.S. And so he wasn't doing business actually in Asia, just had a Hong Kong company. The bank sent him a letter saying, we're closing your accounts. You've got 30 days to move your money out. Here's the problem. He had a Hong Kong company. You can't just easily go to another country and open a bank account for a Hong Kong company, because especially nowadays, unless you're like a big multinational, but if you open a bank account in a country, you need your company registered in the same country or in the region where your bank account is. He tried to open bank accounts in multiple countries and he kept getting shut down. Like, no, you can't. I mean, you have a Hong Kong company. Go to Hong Kong and open your bank account. He couldn't do it because nobody wanted him. His bank would only send the money to a bank account in his company name. That presents a major problem. Major problem. He could only send the money to a bank account in the company name, but no one else wanted to open a bank account for him. And he had a lot of money in there. Like it was 7 figures. And he ended up having to go to Hong Kong and hire a law firm, like a big corporate law firm, to go fight this with the bank. And he paid, I don't know, tens of thousands of dollars fighting this. And ultimately, we ended up registering a Wyoming LLC for him. He got a court order to allow the bank to send the money to his Wyoming LLC's bank account. But he spent he had to go there. He spent tens of thousands of dollars in legal fees to do that. And so it doesn't make sense if you're not, like, it could make sense. Don't get me wrong. I still think Singapore and Hong Kong are viable solutions if you're doing business in Asia. I think it's a great solution if you're doing business in Asia. If most of your incoming or your inflow or outflow of money is from Asian markets, I think it's a good option and it's a viable solution to go there and hire a local director, because it is a tax optimized situation. But I will also say Singapore and Hong Kong are both cracking down. They used to make it really easy. If all your money came from non-Hong Kong or non-Sing sources, you didn't pay tax. But now they changed the definition on what it means to earn money in those jurisdictions now. So they're cracking down on people and actually taxing them on that business. But that's a bad solution for the vast majority of digital nomads now. They still think it is, because you read blog posts that are 10 years old and you think, oh, great idea. The only clients I have right now that still have companies in those jurisdictions are people that do business in Asia. Full stop. Every other client I've ever had that had companies there have since closed them and moved on to somewhere else. But to your point, the U.S. actually, and it sounds weird to say this because everyone thinks the U.S. is this really complex tax environment. Nobody wants to touch it. No one wants to get involved in the U.S. and stuff like that. But if you're not a U.S. person, the U.S. is hands down the best place for you to register your company in like 95% of the cases. If you in the nomad space. Like I had a client call with somebody yesterday who has a vehicle rental business in Mexico. Well, I told her you need to register a company in Mexico. It just makes sense because you need the permits You need to, like, if you rent vehicles, there's special license plates you got to get to show that it's a commercial vehicle. You can't do that unless you have a Mexican registered company. That would make, she asked me, she was like, should I register my company in Wyoming? I'm like, no, that makes no sense. That's crazy. Because you're going to have nothing but problems down in Mexico with this business. So if you have a local business that has a physical location or you're doing physical work in that country, I mean, you don't really have a choice. You kind of have to register in that location. But most digital nomads aren't like that. Most digital nomads are like doing coaching or consulting or like selling some info products, e-commerce, software, those types of things. And all those are virtual type businesses. For virtual type businesses, basically for almost everyone in the world, a US LLC is going to make the most sense. It's easy. It's cheap. Banking is simple. Your tech stack is easy because all of the major tech platforms deal with US companies. It's going to make your life much easier. And for non-US people, for virtual businesses, they're probably not going to pay tax in the US anyway. And for US people, if you're living abroad, you get the foreign earned income exclusion and maybe some foreign tax credits. And there are some other things you could do if you're at a higher income level. There's other loopholes for Americans that make a higher level of income, but you know, you have to justify the expense of a complex structure.
Right. So that's definitely what I want to jump into next is there are different structures. I mean, it sounds like there are some scenarios where people want to create a more complex structure than they need to. That was the example of the Mexican, business that you just referenced. So I think maybe some people try to do that, but it sounds like there's kind of these tiers. It's like if you're a solopreneur that's doing consulting or coaching services, okay, go with the 101, go with pretty simple, right? And if you're in this other scenario, then maybe you graduate, but maybe people tend to want to rush to something that they don't need, or maybe makes their life worse, right?
Oh, dude, I had a Russian client a few years ago who's big in the crypto space. I'm not going to mention a name. He's a well-known guy in the crypto space with a big platform in crypto. But this guy was so funny. He wanted to register some offshore companies. It was completely unnecessary for what he was doing. The whole reason he wanted to do it is because it made him, in his mind, it made him look cooler to have an offshore structure, and it looked more, like literally it just looked more shady. But it was unnecessary for what he was doing. And I even told him, I'm like, you don't need this structure. And he goes, I don't care. I want it because it projects a different appearance. And I'm like, so you want to look shadier? And he goes, well, yeah, kind of. And I'm like, okay, we'll register some offshore companies for you. Like, it was funny, but people do sometimes go overly complex.
Right. Well, so let's walk through a few scenarios like this, and we can maybe get from simple to more complex, right? So you mentioned, let's talk about a solopreneur, I'll call them, right? Digital nomad solopreneur, I suppose, but consultant or developer or marketer, whatever, right? Coach, doesn't matter. And let's say that they are earning about $300K per year, and in USD. And they have, let's assume they already have this, but they have a Wyoming or Delaware LLC. What I'm curious about is what mistakes do you often see with that individual? Like, number one, is that a decent setup for an individual like that? In which case, let's keep it simple and say they're a U.S. citizen, right? But a U.S. citizen doing consulting or coaching or development, etc., 300K salary, Wyoming, Delaware LLC. What mistakes do they make typically?
And I'm assuming here they're like fully nomadic, right? They're doing the real nomad thing, like a few weeks here, a few weeks there.
Sure. Well, actually, I would adapt this. Just remember, I mean, me being in Thailand, everything that we talk about is in Thailand, right? And so I'm gonna all these scenarios.
So this is an American living in Thailand, then.
Yeah, let's say that because I think there's a ton of people that fall into this category in Chiang Mai, for instance, right? A lot of people I know in Chiang Mai are in this sort of scenario. So what would you say for that individual? And again, I do want to add some flexibility. It's someone who planted their flag. So maybe they go back, maybe they have the option to go back to the US 3 months of the year. Maybe they, but for the most part, they're semi-nomadic / planted flag in Thailand for the most part.
Okay. So planted flag in Thailand means they may or may not have a tax obligation in Thailand. So right now, it is possible to avoid the tax obligation in Thailand. Let me get this straight. You probably know this better than me, but If you're bringing money into Thailand that you earned in the previous year, you don't pay tax on it in that current year, right?
That's what they're cracking down on. Is they used to just have that delay, but I believe they're even cracking down on that. So now they're basically saying any money that you're bringing, and again, I'm not a professional in this area, but from my understanding is that if you're there's not that thing of let me wait a year and then bring it in. They're basically saying if you bring it in at all, then we might tax that.
This is the thing I understand in Thailand that's still a gray area internally within Thailand. That's a gray area thing. Like they don't have any real clarification on this yet. If I remember correctly, there was an attempt to pass a law last summer trying to crack down on the people that were bringing money in from previous years, from their company's earnings in previous years. They tried to crack down on it, saying if you bring it in, so they tried to clarify that rule to say you don't pay tax on it if you bring it in only from the previous year or something like that. But then they didn't completely clarify the rule. So at this point, my understanding in Thailand, this is still a little bit a influx. But if I were in this situation, a U.S. LLC definitely makes the most sense for the front end of the business, like where you're getting paid, because it's going to be easier in, let's call him Tom Smith here, Tom Smith, the American consultant. So it's going to be easier to for Tom to get paid through, let's say, a Wyoming LLC, because it's easy for him to open bank accounts. He can get Stripe, he can get PayPal or any other merchant processing account and gateway he wants. It's easy from a tech stack perspective to, like, if you're getting paid through your website, to have the right technology platform for all these things. It's like everything works with a US LLC, like a Wyoming LLC. Everything works. A couple of mistakes I would see. The biggest mistake I see with this is really only relative to Americans, but the biggest mistake I see with Americans that have US LLCs is they very often register it themselves. So kind of the do-it-yourself model, and they're like, I want to save the $200 or $100 or whatever to go do it themselves. Like I just had a client last week who did exactly that, and the problem when you do it yourself is you put your name on the entity in public record. Like Wyoming is very well known for privacy if you do it correctly, but the vast majority of people do not do it correctly. Oh, even better. I had a client last week through Business Anywhere who came to us. We registered the company for them, like, I don't know, 2 years ago or something. And they decided they didn't want to pay the registered agent service anymore through us. And it was in their home state. They didn't want to pay the registered agent service with us anymore. They canceled service with us and decided to be their own registered agent now because they wanted to save the $150 a year. And when they did that, they had to do the filing themselves. They had to file their annual report. They had to do a change form to change registered agent service over to them. And then when they did that, their name and their home address went on public record. And then they emailed us and said, hey, what's going on? Why is my name and address and phone number and everything in public record? I thought we could not have our information in public record. And I said, well, yes, when we were your registered agent, your name is not in public record, but you fired us as registered agent because you didn't want to pay $150 a year. When you do that, you become your own registered agent. Now your personal information becomes a matter of public record. This person was pissed because they wanted the privacy of the LLC, but they didn't realize that's something you actually pay for. Like you have to have a paid registered agent. And so very commonly, especially for Americans, they think, well, I'll just register this thing myself and save $100 or $200 a year on registered agent service. So that's a big mistake people make, is giving up their privacy. Thailand's a good example of this. Thailand is kind of in this gray area situation right now where they haven't fully decided how they're dealing with people earning money from abroad. If that person living in Thailand will ever get audited by the Thai tax office and they find out that all of his income is wired over from a Wyoming LLC to his Thai personal bank account, it's super easy for the Thai tax office to go to the Wyoming Secretary of State website and see that guy's name on public record if he registered it himself. If he used a professional service, like us, to do the registration form and the registered agent service form, his name is not going to be in public record. So at least in that regard, Thailand can't verify that he owns that company or has any association with that company. So I don't know, maybe that seems sketchy, maybe that seems gray area, whatever, but I'm just a big fan of privacy. I don't think anyone should know your business and financial details unless you want them to. So it's a way for you to protect what you want protected. So that's a big mistake I think people make, is do-it-yourself LLC formation. And now it's not like it's expensive. I mean, you're talking a couple $100 to pay somebody to register this thing for you. It's not that much money. And like we talked about before, this is your business. This is not the place to get cheap. The thing that makes you money, the core of your livelihood, should not be the place where you get cheap. So that's a big mistake people make. Other things like, and I don't want to say this is a mistake for this case study example, but something he could do a bit better is a more complex structure. But I would say in his income range, yeah, it would make sense for him to do this. So what we could do in his situation is create an offshore holding company for him that owns the shares or the membership interest of his Wyoming LLC. And so what did you say? 300? He's making, yeah, 300. So instead of that, it's a single member LLC as a disregarded entity for tax purposes. If Tom owns the LLC, that means 300K goes to Tom as the individual. So it's as if Tom, the individual, earned 300K if it goes through this Wyoming LLC. If we shift it instead to an offshore holding company, so instead of Tom earning 300K, let's call it HoldCo Limited, we can shift it to HoldCo Limited. Now, HoldCo Limited can retain earnings, whereas Tom LLC can't retain earnings because it shifts automatically to Tom. But HoldCo Limited can retain earnings, and then Tom pays his salary from HoldCo Limited. In that scenario, that would save Tom about $25,000 a year in taxes. In the first scenario, Tom is paying self-employment tax in the U.S., which is your Medicare, Medicaid, Social Security. It's 15.3% on your first $169,000 last year, $169,000. So 15% of 169 is about $25,000. If he shifts that profit over to an offshore holdco and pays a salary from there, he doesn't have an obligation to pay that self-employment tax anymore because his paycheck comes from a foreign company. So right off the bat, that saves him about $25K a year. So that's not an insignificant savings that would help him tremendously. The other benefit there too is having the retained earnings in that holdco. So from the Thai perspective now, he can pay himself a dividend instead of a salary. And even if he's taxed on dividends, he can pay himself a dividend of only what he needs to survive in Thailand. So let's say he wants to make, I don't know, let's say 50K a year. And let's say now Thailand says we're going to tax foreign dividends. Well, at least he would only be paying tax on the 50K of the foreign dividend instead of the full 300K. So again, I don't want to say that's a mistake he's made. That's just something he didn't know that existed that would be a good strategy to optimize for what he's already doing.
Okay, understood. I threw out a number, but I was hoping it was kind of one of the simple scenarios, but I mean, we could put any number into that. I was just trying to think of a simple scenario. So let's just assume it's 100K, right? So we're not in the holding. I just want, what is a simple scenario? Because like I said, I know most of these people are in Chiang Mai that I run into. I don't know how much they're earning. I threw out a number, but I know that they're usually working for themselves. They're usually doing one of these online spaces, right? And they usually just want something simple. So let's assume that it's a different number. Let's assume it's 100K instead.
So let me tell you, the big variable there is American versus non-American. Okay? Because even if we drop that down to 100K, he's still paying about 15K in self-employment tax. In that scenario, it would probably still make sense for him to have the holdco, because if the holdco costs, let's say $3,000 to set up a holdco, but he saves 15K in tax, I mean, that's a net $12,000 savings, right? So in that scenario, the holdco still makes sense. But the variable is American versus non-American, because Americans, we are one of two nationalities where we are what's called citizenship-based worldwide taxation. So if you're a citizen of the U.S., you're taxed on worldwide income regardless of where you live. You do get some loopholes, like with foreign earned income exclusion and foreign tax credits. Self-employment taxes, you can't get out of that if your income is U.S. source. You can only get out of self-employment tax if it's non-U.S. source income. So that's the point of shifting it to a foreign country. So as an American, if you're making, let's say the structure itself costs you, let's say it costs you $5K. So if your savings is $5,001, then you have a marginal $1 benefit. So you got to decide anything above that where it becomes a valuable thing for you to spend that $5K to do everything. And I'm talking with the consulting advice and structuring the company and everything. Let's say it costs you $5K. So if you save $10K, then your marginal benefit is $5K. Is that worth it for you? I don't know. That's up to you whether the additional stuff, the additional complex strategy makes sense. But a simple strategy would be take that exact same scenario, but say it's a German doing the exact same thing. A German with a Wyoming LLC with a flag planted in Thailand, living there a few months out of the year, and then nomadic the rest of the year doing consulting. A Wyoming LLC would be the super simple solution. Literally, he would need, it's a couple $100 to register and maintain that Wyoming LLC. He does need to do, there's one additional filing he has to do that Americans don't need to do. There's a filing they have to do. It's called a 5472 and a pro forma 1120 that informs the IRS that LLC is owned by a foreign owner. So German-owned LLC. That's one thing. That's one form well, it's two forms technically. They go together. It's two forms you have to file one time a year. So it's not a complex thing you need to do. It's one time a year. So that's the only additional thing they would do. But in that scenario, German doing consulting through a Wyoming LLC, they would pay zero tax in the U.S. They do have to do the filing, but they would pay zero tax. Every penny goes back into their pocket. On the Thai side, most likely, at least in the current system, they probably wouldn't be paying any tax in Thailand. If they would pay tax, they would only be paying tax on the money they bring into Thailand. So if they wire it into their Thai bank account. So if they made $300K and only wanted to live on $50K, then worst case scenario, they wire in the $50K and they pay tax on the $50K in Thailand. But that would be a super simple solution, basically for everyone non-US.
Yeah, that's a great scenario. One little thing I want to tag in there, because I meant to bring this up earlier, but I think people also need to think about taxes slightly different. Now, I don't love paying taxes, but one thing to keep in mind is I just mentioned permanent residence in the past. I mentioned citizenship. Just know that I assume for other countries too, but for Thailand, it's important the amount of tax that you pay, because that has a lot to do with your application for some of these things like residence and citizenship. And so if someone is trying to say, you use this scenario of maybe they bring in just 50K, well, I don't know if you're talking about dollars, but let's say it's Thai baht, right? 50,000
Thai baht.
Thai
Yeah, I was talking
baht.
about dollars.
Okay, well, let's just pretend.
50,000 Thai baht's not very much. But
no, not very much. Not very.
I was evening out into dollars.
No, totally fair. Well, I'm just saying, because I've seen some people do this sort of thing, is they've literally tried to minimize the amount of money they bring into Thailand, because to your point, then you don't have to pay as much Thai tax. But I'm saying that can burn you, because then when you're going after something else, then you're not paying as much Thai tax in Thailand. And I actually saw the amount of tax I paid in Thailand as a benefit for my application. So just something to kind of keep in mind. Now, another scenario, since you brought up the German example, what about, we keep on referencing Wyoming LLCs a lot, right? So let's assume that we have I'm going to use American again, but an American individual from California. Let's use an extreme example. So they live in California, but they like to travel to Thailand 6 months out of the year, right? And so since they live in California, a question becomes, like, let's say they're doing consulting work. So sometimes some of their clients are based in California. Sometimes they stop by the office in California to their client offices. Then sometimes they go over to Thailand and they take some remote calls to their clients in California, right? And so what I'm curious about first is, should they be registering a business in California, or should they be registering a business in Wyoming?
So if they're still maintaining residency in California, they need to be a California LLC.
Got it.
It doesn't benefit them, because what'll happen is, in that scenario you just gave me, 6 months in Thailand, 6 months in California. 6 months in California means, first of all, they're not qualifying for foreign earned income exclusion.
Yep.
Even if they had residency in Thailand, the U.S. is still going to consider them a tax resident because they're going to say they have too many connecting factors to the U.S. and to California. By the way, as an American, there's two ways to qualify for the foreign earned income exclusion. One is the physical presence test, where you're physically out of the U.S. 330 days a year. But the other is the bona fide residency test, where you actually legally immigrate to the other country and become a resident. You get a resident visa or residence permit in that country. And if you do that, you have a lot more flexibility on the amount of time you stay in the U.S. So that's a misunderstanding that a lot of people just think I have to be out of the U.S. 35 days a year or I don't qualify. Well, that's not true. You can actually go immigrate to another country, get a residence permit, and then you can be in the U.S. There's nothing, by the way, there's no number of days that qualify you if you have bona fide residency. Actually, if you read, I could pull up the tax form and show you. It's extremely ambiguous, actually, when you read the IRS form on the determination. But basically what it says is it's based on your connection to that other country. So do you have a home there? Do you go to the doctor there? Do you have a gym membership there? Do you have a phone number there? Do you get your teeth cleaned there? Do you have a car registered? Those types of things. Do you, like, your center of vital interest? Is your center of vital interest in this scenario in Thailand, or is it in California? So if this person still has the home in California, car in California, blah, 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 these types of things. Health insurance is a big one. If you still have all that stuff, the U.S. and California is still going to consider you a tax resident because your center of vital interest is still California, which means you're still filing a federal tax return and a California state tax return. So if you live in California, but you say, I'm going to be sneaky and register my LLC in Wyoming or Delaware or something like that, what's going to happen is you're going to file your California state tax return, and on your income, you're going to show income. Let's say you made, what did you say, 300,000. So let's say you made 300,000 that came from a Wyoming LLC. Well, that's going to appear on your California state tax return. The California Department of Revenue is going to send you a nasty letter saying, hey, you've got to register that LLC to do business in California. You got to pay the $800 a year franchise tax. You got to register it as a foreign entity. And we're hitting you with penalties and interest for the amount of time it wasn't registered in California. So there's zero benefit if your center of vital interest and your residency is California. Almost all cases, there's zero reason for you to have a non-California registered entity. I mean, there are exceptions to the rule. Like, that would be like if you owned a real estate portfolio in Ohio. Maybe you have a bunch of properties in Ohio. Well, in that case, it makes sense maybe to have Ohio LLCs to own your real estate in Ohio because physically the property's there. Or maybe you own a software company with an office in Austin, Texas. Then in that case, it might make sense to have a Texas registered company, a corporation or an LLC registered in Texas. But here's the crazy thing. In most cases, if you're the owner of that company and that company has an office in Texas, even if you had 10 employees that punch the clock every day in Austin, Texas, but you're the owner of that company and you do your work like remotely, physically in California, California Department of Revenue is still going to ask you to register that Texas LLC in California to do business.
Yeah, so that's
an interesting point you bring up, though, by the way, because California is the only state that does that.
Ah, okay. Well, yeah, I tried to use an extreme because I figured I'd been hearing in the news a lot of stuff about how people trying to leave California sometimes might be a little bit stuck because,
let me just bring up one kind of an add-on to this. If you are nomadic, if you are living this nomad lifestyle and you're from California, what you really need to do before you leave the U.S. and go take on your nomad adventure here, you really need to move to a different state before you leave California. To a zero tax state. And by move, I mean you need an address in that state. You need to move your driver's license. If you're a registered voter, you need to move your voter registration. Basically, everything that connects you in a public record perspective to California, you need to cut those ties. Because even if in the scenario, if you're from California and you want to live this nomad life, and maybe you don't even set foot in the US or California for the next 5 years, California still expects you to pay California state tax, even if you qualify for the foreign earned income exclusion at the federal level. Because your connections, you still have that driver's license, you still have everything connected to a California address, blah, blah, blah. They consider that to be your intention to return to California.
Wow. Wow. That's quite an extreme. And that's good to know. I mean, the main thing that even just the level 101 of what we were talking about, I wanted to draw the parallel between the individuals that think they need a Hong Kong company or a Singapore company. And then sometimes they're making it, it's unnecessary. They don't necessarily need that. Maybe it's just a US. Well, it's the same thing. I'm just wondering, some people might read the blog articles and say Wyoming or Delaware looks such a great place to start up a company. Maybe I'll do that. But if they still reside or are part of the year in their own home state, maybe it doesn't make sense to do that, right? Maybe that's
really,
adding unnecessary complication, right?
It does. Yeah, it does. Even you pick Ohio. If you live in Ohio and that's still your center of vital interest, and you're living half the year in Ohio and you go spend half the year in the Philippines or whatever, it probably just makes sense to have an Ohio LLC, because you're still going to be a tax resident in the U.S. and Ohio. Mm-hmm. No matter what, because your center of vital interest is still Ohio.
Great point. Great point. Now, I just was curious, Bobby, is there anything that we didn't talk about? We talked about quite a bit. You've been very generous with your time, so thank you for that. But is there anything that you wish we would have discussed today that we didn't have, that we haven't yet?
I'll hit on a couple of things. Some of it's going to be a little bit of rehashing, but I'll get to the point. But some of the mistakes that people make in this digital nomad kind of lifestyle. I mentioned before, taking advice from online platforms and not getting professional guidance on that. I think that's worth reiterating, that you can't do that, because if you're living that white picket fence lifestyle, you don't have that much complications in your life. If you're roaming between 3, 4, 5 countries in a year, you're adding a lot of variables to your particular situation, and you need good guidance there of people who have experience doing those things, who have clients that have been through that or who have been through it themselves. And so one of the biggest mistakes people make is being cheap and just saying, oh, I'll figure it out myself. I'll figure it out online. And it's kind of like, my analogy to this is, I can figure out how to change the oil in my new car also. Like, it's not like it's impossible. I can go online and watch some YouTube videos. Let's say I just bought a brand new Lexus. I can go online and find some YouTube videos and see how to change the oil in my new Lexus, and how to change the filter, and where the oil goes in, and where the filler or the drain cap is, and all that stuff. I could do that. Absolutely, I can do that. I'm a pretty smart dude. I actually raced motorcycles for 20 years. I know how to rebuild engines. Like, I can do all that stuff. But should I? Should I do that? Like, probably not, because I have things that I'm really good at, and I should probably stick to the things I'm really good at and hire somebody to change the oil in my car. And so the mistakes people make in structuring their business is the same mistakes they make later on in being kind of cheap, is what I'm saying. But getting your business structure set in place first is super, super critical. Staying on top of the rules of the places where you're living is a big thing that most people ignore. People are like, oh, well, I'm going to go to Spain for 5 months. It'll be fine. Well, maybe, or maybe not. Maybe you get a nasty surprise one day and, you end up owing a bunch of tax. Like, I had a client years ago, Swedish guy, who thought he was going to go move to Southeast Asia and spend, not pay tax in Sweden anymore, because he read on Facebook it was going to say, just to register. I think at the time he registered a Hong Kong company. This is a long time ago. This is probably 10, 12 years ago. And he did that for a long time. But what happened is, when he came, he decided to move back to Sweden. He got married, wanted to raise his kids in Sweden and all that stuff. And he got back and he re-registered as a resident. And they said, Well, where have you been paying tax for the past 10 years? Because he didn't exit the country in the proper way. There are things you can do to properly exit your home country. If you don't do them, the country doesn't know you've exited, and they treat you like you're still a resident but non-compliant. He ended up owing over €1 million in tax when he went back because he didn't do things in the right way, because he said, I'm just going to read a Facebook post and do what somebody said online. Big mistake, obviously. Like €1 million mistake for him, over €1 million mistake for him. Not paying attention to things and being a bit lax there. Like, we're entrepreneurs. You and I were entrepreneurs. Probably most of your listeners are entrepreneurs, and you can all resonate with this. I guarantee you, Scott, you're exactly the same way I am when it comes to this, is we think about the next hire or the next client or the next deal or the next sale. We're forward thinking. We log in, we look at our revenue numbers, the number of new clients we had today, XYZ, right? The new website we're building, the new AI agent we're building. We're forward thinking. What's the last thing in the world any entrepreneur wants to think about?
All the paperwork and all the other mess, right?
Yeah, the paperwork. We don't want to deal with that bullshit. We don't want to deal with bookkeeping. We don't want to deal with legal structure and tax filings. And so we're like, yeah, tomorrow. We'll deal with that tomorrow. But in my experience, that tomorrow problem eventually becomes a today problem. And the longer you procrastinate dealing with that tomorrow problem, the bigger that problem becomes when that day happens. Like, most of my clients, I will, like, full disclosure, most of my clients come to me after an oh shit moment. Like, most of them come to me like, hey, like, I remember a German guy, I had a consultation with him like 4 years ago, and he told me, he's like, oh, I'm just going to stay registered in Germany and keep my company registered in Germany. And he traveled all over the world. I told him, I said, well, we should register your company outside Germany. Like, he was doing consulting, coaching or something like that. And I said, we should probably do a Wyoming LLC for you. And he goes, oh, I don't want to do that. I'll just keep it all in Germany. It's easier for me to keep it registered in Germany. And I thought, okay, you know me, do what you want, man. It's your life. And like 2 years later, he came back and did another consultation, and it was an oh shit moment because he owed like 150,000 euros in tax. And he's like, hey, we need to fix this. What can we do to fix this? I'm like, we can't fix the 150,000 you already owe in tax. We can fix you going forward like we should have done 2 years earlier when we had our initial calls. And then you wouldn't have this problem. But that's normally when clients come to me, is when they have that oh shit moment. They're like, oh God, I owe a stupid amount. I didn't know I owed all this money in tax. Or, you know, or like the Swedish guy, because he came to me after he moved back to Sweden and he had that oh shit moment that he owed over €1 million in tax. And I'm like, I can't do anything about that. You didn't exit Sweden in the right way 10 years ago. Just be vigilant in these things because they matter. They can create serious consequences for you. And if you think they don't, just wait 2 or 3 years or 4 years or 5 years, because they will eventually, you know.
Yeah. Now, Bobby, what's the best way for people to either find more about you or get in touch?
Best way to reach out to us is businessanywhere.io through our website. We got a lot of resources on there. I think at this point we have over 2,000 blog posts on most every topic you can imagine. Honestly, we write a lot of blog posts, and every time I see our new schedule of like content, I'm like, who thought of this stuff? Like, we have a pretty good writing team, and I'm like, who came up with this stuff? I couldn't even think of this topic, like, but it's good. Like, we have a ton of content on a bunch of different things. Could be very helpful if you're doing some research. But again, I will stress, if you're reading an old blog post, take it with a grain of salt. Hire a professional, hire us or somebody like us to help you get your structure organized and set in place. We're also on all the social channels. I mean, we have a pretty good YouTube channel. We're on, if you like watching shorts, YouTube shorts or Instagram, TikTok, we're on all that. But if you want real information, go to our YouTube channel. We have a lot of YouTube videos on a lot of this stuff. So that would be the best way to reach out to us.
Awesome. Well, I'll put the contact information in the description as well. But I just want to thank you for your time, Bobby. It's been really insightful. So thanks so much again. And here's to optimism, right? We're going to do okay.
Thanks for having me, Scott. I appreciate it.
All right. Cheers. Bye.
Cheers.